What's up, everyone? Good morning. I hope everyone is doing well and welcome. Today is December 12th, right? Monday. We're starting a whole new week, and we got a few things to talk about, right? We have the overall Fed this week. It's the final Fed meeting for the year 2022, and what a year it's been. And we're gonna see exactly what comes out of that, right? And a lot of people are on the edge of their seats. A lot of traders on the edge of their seats, waiting for the Fed. One of the most anticipated Fed announcements of, well, maybe not one of the most anticipated of the year, but it's for sure the most anticipated for this month, naturally, considering it's the only one. But we had a blackout period, and now the Fed is coming back. And we're anticipating this because so far it's been maybe one of the most anticipated ones for the quarter, because so far we've been raising rates 75 bips, right? 75 bips, 75 bips, 75 bips. And all of a sudden we have the high probability of raising 50 bips. So everyone is looking forward to that. Not to mention we have the CPI data that comes out. We have the PPI that came out slightly hotter than expected last week. CPI comes out tomorrow morning. We'll see how things shape up from there. But realistically, we might get a lightly hotter print based on that PPI number. But all eyes are on CPI and the Fed. Tomorrow, Tuesday the 13th, and Wednesday the 14th of December, we have two main events that could shape up not only the week, but the remainder of this month, because into the end of the month, realistically, there's going to be very low volume and low trading as everyone goes away for a holiday. So keep that in mind. Like I said, we're on edge right now. We're at the edge of our seats. Fed Chair Powell is still warming up the bullpen, but he'll be coming out to pitch on Wednesday in a key game for the monetary policy series, right? So we'll see. Is it a changeup? Is it what we expect? Realistically, are we going to clock in a 50 basis point or a 75 basis point hike? We have the high probability. I'm just opening this up right now. I don't know the probability, but pretty high probability. See, load of a 50 basis point hike. Now 75%. It's been consistent pretty much with 75%. It's slowed down a little, but 25% chance of a 75 basis point hike and a 75% chance of a 50 basis point hike. So FOMC policymakers may not even know what kind of toss in the making, as the FOMC policymakers may not even know what kind of toss in the making, as it will highly depend on the CPI data print that is going to be established tomorrow. We already saw the PPI, so that's going to have some effect on what we can see on Wednesday, right after those publishings. So if things come in hot, we could see a little more hawkish of a tone and put further pressure on stocks. And I'm kind of leaning towards that. I don't know if we're going to hike 75 bips, but realistically, the 50 bip is pretty priced in. Things could also go the other way if inflation shows signs of responding to the hard-hitting hiking cycle since the 1980s. So the time for moderating the pace of rate increases may come as soon as December. That's what Powell said in his last media appearance before the current FOMC blackout period. And we have a broad set of thoughts about where the destination might be, but we could be wrong. So we'll have to see. No one knows pretty much is what he's saying, and they'll just play it by ear. We're probably going to see some volatility, whether it's to the upside or downside. Stock futures are starting the week slightly green ahead of the FOMC meeting this Wednesday, which will include updated interest rates, economic projections, and while contracts linked to the major averages are up about 1% pre-market, all three indices lost ground last week over severely rocky sessions, especially into Friday. Keep in mind, we have also rolled over on the futures. We're now trading the March contract. There's more volume on the March, so keep that in mind. If you are trading futures, please switch over to the March. The values and the levels are going to stay consistent, but we will probably see some rockiness ahead. And we also have a quad witching event coming out this Friday, which adds to more volatility on the week. A quad witch event means that index and individual stock futures and options are going to set to expire. So those contracts are going to be null, and usually on those Fridays, it might be best not to trade. There's going to be some wonkiness. There's going to be some weird movement. Options pricing contracts especially are going to be hit around. We also have Yellen that speaks, while a growing number of economists and CEOs predict that the U.S. will enter into a recession in 2023. Other market makers and policymakers feel that one is not necessary to bring down inflation. Among them is U.S. Treasury Secretary Janet Yellen, who is of the view that inflation has peaked and is already declining. So she's also hopeful that the labor market will remain healthy as the central bank continues to execute policy based on lessons learned in terms of the high inflation period in the 1970s. So in the interview, first of all, shipping costs have come down. Delivery lags, which were very long, those have shortened. Gas prices are way down, and I think that we have a substantial reduction in inflation in the year ahead, if not an unanticipated shock. That's what Yellen told CBS's 60 Minutes on Sunday. There are always the risks of inflation. The economy remains prone to shocks, but look, we have a very healthy banking system, and we have very healthy business and households. We are at or beyond full employment, and also it's not necessarily for the economy to grow as rapidly as it has been growing to put people back to work. So realistically, there are some aspects that I think are not seen here in the space that we're just starting major job cuts in both banking sectors and the tech sector. So that's something to consider very, very closely as we come into this next year. So keep that in mind. Also, with the overall what is it called? Treasury market, right? The bond market, where we're seeing a lot more downside in that too. So there are still a lot of risk and a lot of tailwind risk here that I don't think a lot of people are looking at. But another thing, if you're on the contrarian side of things, you can think that, hey, if everyone's thinking recession, even all these managers, right? Maybe we get a softer landing and we get that pop. So no one necessarily knows, but is there going to be more downside before we actually see a bottoming out? I would like to think so, right? I don't think the economy is as strong as they would like to deliver. So yeah, there are a lot of thoughts on that. Inflation, even if it has peaked, it's very far away from the target, and I don't see that coming down within a month or a week. So you still have a lot of those things that could shock in Q1 of 2023. So that's one thing that you have to understand when you're looking at this and the broader sense. Yeah, okay, in the long term, we might be into something and a bottoming out in 2023. But if we're going to play it as traders and as swing traders, we have to understand that we take it step by step, and I don't necessarily think that things are bottoming out as soon as they might appear. With that being said, let's take a look at some levels on the S&P 500 futures here. Again, March contract, the HH 2023. We have a key level, 3988 to 90. That's a huge area that's been played multiple times before. I'm going to have to wash that like a hawk. Keep that in mind because I'm going to be looking for a fade up off that area. There's another area, 3977, right? Price are slightly below that area right now, I think, or in and around that area. So if that area manages to hold for the downside, I think that's where we start to see a little more sell. Above it, right, I think we can go and target that 3988. So keep that in mind. Levels below 3970, 71. You have 3965, 62. You have 3952, which I think is going to be one of the last stopping grounds for this market to see if we can get somewhat of a rebound from there in this session. The major key area, 3931 and 3920 down to 15 is going to be massive if we can see that early on this week. Obviously, a lot is going to be played off of the CPI data and the Fed that comes out this week. So just keep that in mind. Don't overtrade to start the week. Select very few trades. I'm going to be looking for one or two maybe today and tomorrow, and we'll see how that goes. Hey, Tim, thanks for saying hi. Ross, I appreciate it. The beard is looking brutal. Yeah, it's I've broken 2 electric shavers, so I cannot shave, and I don't really want to keep buying electric shavers for one use. So when I get back to Bulgaria, I'm going to go and get it trimmed up, but thank you. Looking very Neanderthal these days. So I appreciate that. Everyone have a great trading day. I am on the March contract for 2023. The H, yes, the H for the futures. And with that being said, let's see what we get today. Hope everyone has an amazing trading day, and we'll see y'all tomorrow. Thanks again for showing up. Chat soon.